Shareholder briefing for our shareholders in Trinidad and Tobago. I am Samantha Chung, Executive Vice President of Investor Relations at Sagicor Financial Company Limited, and I will be your moderator for today. As we were preparing for our annual general meeting, and despite our communications in print, press, and online, we wanted to go one step further to engage with all of you directly, albeit virtually given the current pandemic situation. We are hosting today's briefing, and our executive team is available to answer all your questions. Before turning the call over to Dodridge Miller, our Group President and CEO, allow me to introduce our panelists who are present today. Mr. Timothy Hodgson, Group Chair of the Board, Mr. Stephen McNamara, Vice Chair of the Board, Mr. Dodridge Miller, Group President and CEO, Mr. Andre Mousseau, Group CFO, Mr. Ravi Rambaran, President and CEO of Sagicor Life Caribbean, Mr. Robert Tristral, General Manager and Executive VP of Trinidad and Tobago Sagicor Life, Ms. Althea Hazard, our Corporate Secretary, and myself, Samantha Chung, Executive Vice President, Investor Relations. Dodridge will begin and open with some remarks, and followed by Ravi commenting on how we managed through the pandemic. At the end of the presentation, if you have a question, kindly enter your question in the chat widget at the bottom of your screen of the Zoom platform, and I will read your question to our panelists. With that, let me turn the call over to Mr. Dodridge Miller, our Group President and CEO. Dodridge?
Thank you, Samantha, and good afternoon, shareholders. My remarks this afternoon will cover the financial performance of 2019, update on our strategy, our financial performance for the first quarter of 2020, our outlook for the remainder of 2020, and then, as Samantha said, Ravi will then do an update on our response to COVID-19. So turning to our financial performance for 2019, our group had strong operating performance for the year. Group net income, excluding the Linevest transaction expenses, amounted to US $147.5 million, and this compares to US $102.9 million for 2018. Net income attributable to shareholders, excluding the Linevest transaction expenses, was US $87.4 million, compared to US $36.5 million for 2018. You will recall that 2018 was impacted by the provisions for the government of Barbados debt restructuring. Group revenue grew by 35% to reach $1.9 billion compared to US $1.4 billion for 2018. Growth was experienced across all segments and included growth in insurance premiums, particularly in our US segment, increase in net investment income, banking revenue, fees, and other income. Benefits increased by 46% in line with the growth in business, and operating expenses grew by 11%, reflecting the general change in business across all segments. Turning to an update on our strategy, we continue to execute on our strategy of organic and inorganic growth in our core markets in the Caribbean, accelerated growth in our US segment to achieve scale, optimizing our use of capital through our captive reinsurance company, Sagicor Re Bermuda, increasing our use of technology across all segments to introduce new modern distributions and reduce operating costs, introducing a new redefined suite of products and services that are fit for the changing environment. Turning to the Linevest Sagicor transaction. This transaction was approved by you, our shareholders, in June of last year. Regulatory approval was finally received on December 4th, 2019, and the transaction was completed on December 5th, 2019. Sagicor shareholders of old Sagicor became shareholders of Sagicor Financial Company Limited, new Sagicor, and the shares were converted at approximately 4.32 old Sagicor shares for one new Sagicor share. This ushered in a new era for Sagicor with a listing on the Toronto Stock Exchange. We are aware that the process has not been as seamless as hoped for to our shareholders, and we want to assure you that we're working with the TXX, international and local brokers to improve your experience. We're also aware that there have been challenges in the receipt of your dividends, long time to receive checks in the mail, and issues around depositing US dollar checks with local banks. Again, we are reviewing the dividend process to address these issues. The partnership with Invest was designed to deliver a listing on an international liquid stock exchange, access to new capital to fund our growth, and proper price discovery as evidenced by a share price that reflects the value of the company. The partnership has so far delivered on the listing on the Toronto Stock Exchange, and our company has over US $400 million in new capital to fund our growth. However, the share price has not performed as expected. The long time it took to close the transaction was primarily responsible for the lack of enthusiasm from Canadian shareholders at this point. We were expecting to re-engage with the Canadian market after our 2019 very strong results, but unfortunately the various lockdowns and travel restrictions have prevented us from re-engaging as we had planned. We're expecting to re-engage within the next few weeks and tell the story of the company's performance. We remain confident that the TXX will deliver on the price discovery as we had described to you. We announced 3 transactions towards the end of 2018 and the beginning of 2019. These were the acquisition of Bank of Nova Scotia's Jamaica insurance operations to close in 2019, the acquisition of Bank of Nova Scotia's Trinidad insurance operations to close in 2020, and the acquisition of the portfolios of Clico and Baco in Trinidad and Tobago, also to close in 2019. The BNS Jamaica insurance acquisition was cancelled due to the late completion of the Invest Sagicor transaction. And the BNS acquisition Trinidad portfolio has encountered some regulatory hurdles, which we believe will render the economics of the transaction unattractive to both parties. We do not expect this transaction to close. The Clico Baco transaction remains outstanding and is awaiting final approval. During our fourth quarter of 2019, our subsidiary Sagicor Group Jamaica acquired 60% of Advantage General for US $31.5 million. Advantage General is a highly profitable P&C company specializing in the motor business operating in Jamaica. With this acquisition, Sagicor Group Jamaica has expanded its range of services to include property and casualty insurance products. Turning to the financial performance for the first quarter of 2020, like most companies across the globe, the first quarter of 2020 was overshadowed by the global pandemic COVID-19. Just under 9 million people were infected as at today, and about 500,000 people recorded as dead. Countries responded with closure of borders, restrictions on travel, lockdowns, and stay-at-home orders. Business ground to a halt, and global GDP declined significantly. Within this context, our first quarter results were impacted by the events I've just described. Net income to shareholders was a loss of $29 million compared to a profit of $15 million for this first quarter of 2018. The majority of the variance was due to mark-to-market losses on assets and repricing of risks. Absent the effect of the pandemic on our operations performed very well. Adjusting for the impact of COVID-19, our normalized net income for the quarter would have been $18 million compared to $15 million the previous year. We're happy to report that asset values have had a meaningful reversal of the losses since the end of the quarter. Turning to the outlook for the remainder of the year, our outlook for the remainder of 2020 remains uncertain. We expect that the outcome to be within the boundaries of our own internal stress scenarios, and we have adequate capital of 1.7 billion and liquidity of 400 million to weather these events. Management is also taking measured steps to mitigate the impact on our operation. We believe that many of the innovative steps we've taken for the pandemic are here to stay, and we continue to redefine ourselves to operate in a post-COVID-19 world. Thank you very much. I'll now turn over to Ravi to update you on our response to COVID-19.
Thank you, Doddridge. Good afternoon, shareholders. Our response to COVID-19 was based on a fundamental objective of the protection of life. At the same time, we recognize that conditions were changing rapidly, and we also had to act with speed and with compassion. Our response was threefold, based on the stakeholders that we serve. The first, our communities. We allocated, with the generous support of the board of directors, $1 million to fighting COVID-19. Our first support was our governments through the various health authorities in the 19 countries that we operate in by providing personal protective equipment, ventilators, testing equipment. We also recognize that with the curtailment of economic activity, both on the demand and supply side, that the vulnerable in our society were at risk of being even more vulnerable. And so we deliberately targeted food and healthcare relief to the homeless, to the orphanages and elderly in the elderly care homes across the countries. In addition, we recognize that with the closure of schools, that children who were due to write exams, both at the primary level and at the secondary level, were at a disadvantage. And so we funded and provided online teaching courses for those children using television primarily as the medium. So that was the first line. The second line related to our clients. We engaged our clients in town hall meetings, and the first of its kind, we believe, in the Caribbean. And we gave them the assurance and comfort that we would not terminate any policies because we recognize material uncertainty. Specifically, to our policyholders, we allowed deferral of premiums to our commercial mortgages, to our residential mortgages. We also allowed deferral of mortgage payments. To our clients on our medical policies, we provided upfront 3-month supply of pharmaceuticals. To our clients who have pension policies with us, we upfronted pensions between 2 to 3 months, depending on the jurisdiction. But in all instances, we provided the comfort to our clients. If our measures weren't enough during such uncertain times, they simply needed to contact us, and we would act with speed and with compassion. And we gave them that comfort that all COVID-related claims from any part of our business would be honored. So that was our second strand of support. The third related to our staff and advisors. We had been monitoring the impact of COVID-19 since the end of December. And so in early March, we roll out our business continuity plans. We immediately then had 100% of our people working from home. Seamless transition, thanks to the tireless efforts of our technology area. We have gradually reopened, but we have gradually reopened in line with professional advice from safety and health experts. And so right now, our reopening really has client-facing staff, excluding those who are at risk. In terms of advisors, we engage in advisor training. We engaged in providing payment relief because we recognize the ability to sell during this period was very difficult. But at all times, we engaged in regular town hall communication to all of our stakeholders in the same way we're doing here today. And I would say to you, from the observable and measurable feedback that we've had on Sagicor's response across all of the countries, it has been very, very positive. And it allowed us, so in a way, I think that this period has allowed us to really live our vision to improve the lives of the communities in which we operate and to really demonstrate the strength of our vision and the value of Sagicor's people and brand. So over back to you, Doddridge.
Samantha, I think we can now open up for questions.
Great. Okay, thank you. So our first question actually comes from Denzel Noel, and he asks, will Sagicor consider depository receipts on regional exchanges, in particular Trinidad and Jamaica?
We have heard that question before. We have not addressed it in our minds because we believe that we can develop a process that will make it easier for our shareholders to trade. And secondly, that the value would be demonstrated as we described in our prospectus and in our meeting during 2018.
Okay, thank you, Doddridge. The next question comes from Dennis Yagasar. And his question is, why has the share price of SFC on the TSX declined so dramatically?
We can shift that question to Andre. He's at practice today.
Thank you, Doddridge, and thank you for the question. I think as Doddridge indicated, it took a lot longer than we had initially sketched out to close the transaction. You recall we initially announced the transaction in November of 2018 and had hoped to close in the first or second quarter of 2019. And the closing after regulatory approval was finally achieved in December of 2019. And so in that time, I think some of our engagement with the Canadian market went stale. And by the time we were ready to engage with the Canadian market on the back of our 2019 results, which, as Doddridge pointed out, were very strong and ahead of the guidance we had given to the investor community, the world was in the throes of the pandemic, and our share price declined pretty much in line with global insurance companies, many of which declined 40 to 50%. However, we have yet to see the recovery that many of the global names have seen. So I think it's our sense that we need to now re-engage with the Canadian market, and that investors will be more willing on the back of the Q1 results and of the recovery from the pandemic to take a look at the new names. And management is actively engaging as we speak with the market.
Thank you, Andre. Our next question comes from Adam Raful. His question is this: given the fact that investors in Sagicor have lost over 43% of their value since listing on the TSX, and the fact that Trinis own over 20% of all shares, can the board consider a motion to cross-list on the Trinidad and Tobago, Trinidad Stock Exchange in 2021? Doddridge?
Yeah, so we were on the Trinidad Stock Exchange since 2002, and we saw no better performance. We honestly believe that listing on the list, a liquid stock exchange, the Toronto Stock Exchange, and the company performing is the best bet for our shareholders. And we continue to be confident in that strategy. That's what we will pursue.
Thank you, Doddridge. The next question is on our NCIB and how it works. Will you be randomly selecting shareholders for the share buyback? Andre?
So I can take this. The normal course issuer bid is part of the strategy that we're using to engage with the market and provide liquidity and support for our share price. The normal course issuer bid is a common mechanic used by companies listed on the Toronto Stock Exchange. And the way it works is we need to appoint a broker, which we have done, to act on our behalf. And that broker goes out and puts bids into the market on our behalf and goes and buys those shares for cancellation. So with respect to the direct question, since the shares are purchased over the exchange, by definition, we don't know who we are buying from. And all shareholders who choose to avail themselves of using the market mechanism could have an opportunity to sell into it. So basically, what we're doing is we're providing an additional bid for shares over the exchange over and above the bids that are there from other investors.
Great, thank you. The next question is on our dividends. It's a shareholder from St. Lucia, and he would like to know how he can receive his dividends, either by direct bank deposit or by check. Maybe Doddridge?
I'll ask Althea to answer that one.
There is a facility for payment by direct deposit. There's a cost attached to it, but certainly that option is available to the shareholder if that shareholder expresses that desire to the TSX Trust or registrar and transfer agent.
Thank you, Althea. There's a question from Peter Purnell, and this is in relation to the CLICO transaction. Mr. Miller, could you kindly repeat the reason for not moving forward with the CLICO traditional portfolio transaction in Trinidad and Tobago? I think you may just need to clarify our stance on that.
I think it has been pretty widely stated in the public domain that we are awaiting the regulatory approval of the transaction. So we've done everything we needed to do. Agreements have been signed. We're simply waiting on regulators to approve the transaction.
Okay, thank you, Doddridge. There's just a follow-up question on the normal course issuer bid from Fatty Thorne. And maybe, Andre, can you just explain how the pricing works for that share buyback? And why is it 3 million shares, such a small daily amount?
Okay, so there are 3 questions in there. The question with respect to pricing, the rules of the normal course issuer bid are that the price must not exceed the prevailing price at the time of the repurchase. So in effect, the rule is there so that a company cannot drive its share price up, but can provide additional liquidity at the market value at the time. So the specific rule is any trade that is made where Sagicor acquires its own shares must be at the same price or the lower price as the immediate trade before it. Could you remind me the other two questions, Samantha?
The other question is on the $3 million limit and why the small daily limit.
So the last part first, the rules of the, again, that govern the normal course issuer bid are that you can have no more than, the rules traditionally no more than 25% of the average daily trading volume for the prior 6 months. Because of the COVID pandemic, the regulators have expanded that to 50% of the average daily trading volume for the prior 6 months. And so because our average trading volume had only been approximately 8,000 shares, the daily amount that we could repurchase was set mechanically. There is an exemption under the normal course issuer bid, which would allow us to once a week buy a block of shares, and the size of that block of shares is not limited, which is how we could avail ourselves of eventually purchasing up to 3 million shares. The 3 million shares was an initial amount that was discussed and approved by Sagicor management and the board. When you put in place a normal course issuer bid, it needs to go to the Canadian securities regulators, and they require you to put a number on the application. So we picked that as an initial amount. It means that it is a relatively modest amount of capital in terms of, approximately $10 to $12 million that we would spend initially on this amount. And if we chose to do more, we could go back and increase the size if and when we had acquired 3 million shares.
Thanks, Andre. The next question relates to broader strategy. Does the board of Sagicor plan to invest in the Canadian insurance market in order to build brand recognition in Canada?
Samantha, we don't have any current plans of investing in the Canadian market, but Sagicor has grown by acquisitions or expansions, and if something came up that made sense for us to acquire, we would certainly take a look at it, but there are no current plans.
Great, thank you. Just a moment here. There's just one other general question, Andre, on the NCIB, just to help people understand how, if it's supportive or of the share price or not. The rationale behind that, the supporting of the share price.
Samantha, I didn't hear all of the
question is,
but if we're talking about the rationale, I think it's threefold. The most important rationale to the normal course issuer bid is to provide liquidity to existing shareholders to the extent that they would like to avail themselves of it. The second rationale is we think that our share price is not indicative of our of fair value, and to the extent that we can provide technical support by mopping up sellers, and that helps the share price improve, then that would be a good outcome. The third point is that by repurchasing shares at a discount to our book value, we are in effect increasing the book value per share for all shareholders who remain and do not choose to sell into this. So acquiring shares at these levels are quite accretive to all shareholders on a book value basis. And on that basis, the board decided and agreed with management that this would be a good allocation of capital.
Okay, thank you. If there are any other questions, please enter them in the chat line, please. We'll just pause for a moment. I don't see any other questions at the moment. So with that, I don't see any other questions. Before we wrap up, Dodridge, is there anything else you would like to say?
Just to encourage shareholders to reach out and participate into the AGM on the 30th. It was rescheduled to allow them to have access to the numbers in order to be able to participate in the AGM. And we look forward to chatting with them there as well.
Great, exactly. And just further, just to add to that, in order to get your control number, if you had not received your packages, you can email directly to the TSX Trust at sagicor@tsxtrust.com. It's a dedicated inbox just for our shareholders. Or you're welcome to also email investorrelations@sagicor.com, and one of us will be able to assist in that regard. All information is available on our website, including notices, press releases, and various forms that you might require. And please access it there. I do have one more question, if you don't mind. There is one question in regards to the dividend. Do we intend to maintain a quarterly dividend payment as per the prospectus?
The answer to that is yes, Samantha. We do intend to maintain a quarterly dividend.
Great, thank you. Okay, so seeing as there are no other questions, I thank you very much on behalf of the entire team at Sagicor for your participation today and your questions. We thank you very much for your ongoing support. And with that, this concludes today's call. Thank you very much.
Thank you very much.